So I think her idea, Clive, is that of financial repression, where you're only paying investors like 4 or 5%, but the currency is actually being debased by 6 or 7. So yeah, they can carry the debt. Friday, April 26, 2024, Maneco 64, home of alternative economics and contrarian views. So I've got Clive Thompson on again this Friday. It looks like it's going to become a fixture. Just before we start, Clive, I just want to tell the viewers that they can find you on LinkedIn, Clive Thompson. You can connect with Clive there. He writes a lot of posts, very interesting things. That's how I got to meet Clive, because he used to follow my channel and we were connected to LinkedIn. And I read one of his articles and I said, Clive, would you want to do an interview for my channel? And that's how it all started in November of 2022. So how's your week been, Clive?
It's been quite hectic, actually. I've had a lot of invitations, perhaps because of what I'm writing on LinkedIn, in terms of going to lunches. Yesterday, I was at the British-Swiss Chamber of Commerce luncheon. We had a speaker from the government who, I have to say, the Swiss politicians, it's one of the very few countries where they're actually human beings. I can't remember her name on the spur of the moment. A lovely lady. She's pregnant and she's got a family, and she was talking about when she goes to the supermarket. Everywhere she goes, people stop her and say, "Oh, I know you," and then they have their point of view. And her daughter was with her, who's 7 years old, and said, "Mummy, you're always talking to people. That's all you ever do." So, but how many politicians in the UK actually get to talk to the public? They talk in public forums, but you don't get to see them in the supermarket, really, do you?
No, and I think they wouldn't get as such nice treatment from the public. And yeah, I remember when I lived in Geneva, my dad was a member of the American Chamber of Commerce in Geneva, and I went to a lunch once, and John Kenneth Galbraith, the economist, he was speaking. Um, I mean, yeah, there's some interesting things going on in Geneva for such, it's not a big city. People don't realize what is it, Clive, 300,000 people?
I think in the canton of Geneva, it's about 600,000, but obviously the city of Geneva, which is part of the canton,
Yeah,
it's probably half that. I don't
yeah,
have the figure for the city.
yeah.
Um,
Great.
but we have a very good public transport system. The buses and the trams all run on time. They arrive at exactly the second they're supposed to arrive, and leave on time as well. And everything is joined up together. So if you pull into a railway station, you have to make a connection. You can be sure that your connection is exactly 7 minutes difference from the time you get off the train. So
Yeah,
everything works.
I think the only thing I've noticed over the years, because I don't live there anymore, is that, yeah, it runs smoothly, as you say, but there's a lot more graffiti now.
Um, I honestly said, I don't see. I haven't seen that. I don't
Uh,
know.
Maybe it's further up because I take the train up through Lausanne, so you can see a lot of the graffiti. But
I was in Geneva yesterday and saw. I didn't. I would have noticed if there was graffiti. I
yeah,
didn't see any.
good. So, Clive, I would say the data yesterday for GDP was quite significant. The GDP came out for the first quarter. It's the advanced number, I think. It came out below 2%, around 1.6. The price data came out a lot higher, like the core PCE went up to 3.8. The GDP deflator went up. So I saw a lot of comments about stagflation. And from what I remember in the 80s, when people were talking about the stagflationary 70s, is that it was a big shock to the economists back then, and in particular the Keynesian economists, because they never think that you can have inflation or currency debasement when the economy is slowing down. And it seems like everyone's surprised again. It looks like the Keynesians haven't learned the lesson, maybe because they believe the central banks have currency debasement under control. But I venture to say that they're going to make the same mistakes that they made in the 70s, in the 2020s.
Yeah, I mean, if we look at the inflation data, it's showing three. Well, the one they're kind of looking at is the rate of inflation minus food and energy, which is showing up at 3.8% per annum. So that's still falling, but of course it's falling if you take out food and energy, which are rising in price. If you look at the real inflation rate, and I looked at that. That was consumer prices. The real they say that all items are rising by 3.5%, but that number is not heading towards 2%. It's heading upwards. So I don't think Mr. Powell is going to get his 2% inflation anytime soon. And of course, energy prices are high at the moment. Oil prices are high. Commodity prices are rising. So all in all, I don't think we're going to hit that 2% inflation target. Now, there is maybe one small factor which might help the government a little bit on the inflation target, and that's housing. The way housing works, it's a big component of the consumer price index, but the way it works is they look at the rents that people are paying as opposed to the rents that would have to be paid. So rents which would have to be paid are kind of stagnating at the moment. They're kind of flat. So they're not actually rising. But the figure which goes into the consumer price index is still rising because as people's agreements come to maturity after 1 year or 2 years, the rent is being put up to that new higher rent. So that there's a little bit of a lagging effect there. But I think by the time that lagging effect tails off and becomes stable, we'll be seeing rising prices from all the other factors which are coming into inflation. So I think it's fairly unlikely we'll get to the 2% target that Mr. Powell is hoping for.
Yeah, I think here in the UK as well, they've changed the way they calculate the CPI, and they call it renter's accommodation or something like that. They don't for housing, they don't calculate, the how much more you're paying for your mortgage or how much more you're paying for a house if you're going to buy it. They use this rent calculation, which I would say keeps the cost of living lower than it actually is. And here in the UK, though, rents have been going up quite a bit. I think I saw something a few weeks ago that they've gone up 9% in the last year. And Clive, I'm also seeing that, mortgage rates in the US are still quite high. They're like around 7%. In the UK, they're ticking back up. And there's a lot of buy to let here in the UK. And I think a lot, there's like 1.6 million people that are whose mortgages are coming for renewed this year in the UK. And in the UK, people like to fix their mortgages for 2 or 5 years. So I think it's going to get worse. Even if they don't, even if they underestimate, the how important housing is to the CPI, I think is going to seep through.
Yeah, well, you probably didn't see it, but a few minutes ago, Reuters came out with an article saying that the US 10-year bond, where the yield is currently 4.68%, that's 4.68% and rising, they say investors need to brace themselves for a 5% yield on the 10-year. And basically, that's where we're going. And of course, that will have an upwards influence on mortgage rates. And the other thing you may not have noticed, this morning, there was a huge leap in the 3-month T-bill rate in America. When I say huge, really, it may not sound a lot. It went from 5.4 to 5.485, but statistically, that's a very large and very unusual change. But it's the highest rate this year for the T-bill rate. So what this shows is that expectations are shifting gradually from an interest rate cut towards the possibility of maybe at the moment interest rates stay high for longer, but going in the direction of interest rates, the next move in interest rates in the United States might be upwards.
Yeah, I'm just bringing up here the 3-month T-bill on this website that I use, investing.com.
Okay, I'll try and
And
look over here, but
it's you can, let's see. Yeah, you're right. It's jumped quite a bit. You kind of wonder though sometimes if those jumps are related to, because sometimes these 3-month bills or 1-month bills, the information providers, they keep an old 3-month and then they have to adjust it. But yeah, like you said, it's jumped here from I think yesterday it
let
was
me.
around
I'm just bringing it up on my one.
5.4. It's now at 5.5 here, as you can see, Clive.
3 months. Yeah, I've got five. I've got 5.488,
Yeah.
and that is updated daily. So
Oh, yeah.
yesterday it was 5.40.
Yeah.
I don't
It's
know if
just that
you.
sometimes they have to update the T-bill itself, like they have to put a new
Oh,
one.
okay.
But yeah, you can see
Yeah.
here. I've got it here. 3 month
Okay.
says it's up 10 basis points overnight,
Yeah.
which
So
what you said, yeah, 5.5. And I think that means that more and more people, investors are expecting maybe even rate hikes, because if you remember well, at the end of last year, beginning of this year, all the talk was about 3 rate cuts.
yep. So I think that I'm just looking. I'm just looking for your screen where you're display. Oh, there it is. Yes. Okay. Actually, shall I'll just show you my screen. I've got a better way of
Yeah.
displaying that.
I'll
If
stop.
you bear with me for a second,
You,
um,
you can
I'll bring
share.
up that. There we go. Share. Now you should be able to have a better view of it now.
Yeah.
Uh,
Oh, yeah.
so if you look at the far right hand side, you can see that sudden leap
Yeah.
today.
Overnight.
Uh, so I don't know what's going on with that.
Yeah, and for those of you who are wondering, how can the T-bill be trading overnight? We're Clive and I are in Europe here. It's like quarter to 9 a.m. London time. Well, the U.S. Treasury market trades everywhere around the world, almost 24/7, and it hasn't always been like that. But I think there's been a big push since the 90s to make U.S. Treasuries like the most liquid and safe, so to speak, asset out there that every country trades, and that's why yields can change like that. And talking about treasuries, Clive, I think you told me you listened to some of the comments that Janet Yellen made yesterday. So what did Janet Yellen have to say?
Well, it was remarkably astute as far as she goes, and she made a very good case for the way they're running the economy. Um, I think there were a few things that left me wondering. Obviously, they asked her, this is Reuters who are asking the questions, they asked her about the interest rate in the United States and the interest being paid on the national debt. And she said, I don't see it as a problem because she said the interest, the real interest rate that we're paying is assuming we get the cuts in spending that are proposed by Mr. Biden for 2025. That's a big assumption that they cut spending. We see that the real interest rate we'll be paying will be just 1%. Now, she didn't say 1% of what. Is she talking about 1% absolute? Is she talking 1% of GDP? But none of those figures make any. If it's 1% of GDP, that's fine. That would be maybe true. But let's just say there's no point in comparing the government's debt with the national income of the country, because the national income of the country doesn't belong to the U.S. Treasury. It's like me comparing the interest on my credit card with the entire income or the entire income of my firm or my family or some wider group. So what they should be doing is comparing the interest on the national debt with their budget, i.e. how much they're collecting in taxes. And that figure, I saw a figure this morning saying the figure is heading towards 1.2 million over the last 12 months. And that would be over 20% of the tax take going in interest after last year's number, which was only 14% of the tax take. So
Wasn't it
it,
1.2 trillion, Clive? Not.
yes, 1.2 trillion is the
Yeah,
correct figure. Yes.
if you don't mind me interrupting you a second, I think by 1% she meant if you deduct the CPI or inflation, that the real interest that they're going to pay is 1%. So She would want to see that number negative, and they probably are seeing it negative because I would say the Bureau of Labor Statistics doesn't really give you the true rate of currency debasement. So I think her idea, Clive, is that financial repression, where you're only paying investors like 4 or 5%, but the currency is actually being debased by 6 or 7. So yeah, they can carry the debt. But and if you don't mind me interrupting you again, I just want to let people know that that's their policy. It's called financial repression. They used it after World War II, and they're using it now. And that's why you need to, in my opinion, get yourself a bit of gold and silver, uh, because gold and silver in a stagflationary environment like we have now will protect your savings. So Miles Franklin, for example, they've got these specials here that you can go to their website. And if you're interested in buying more or starting to buy more, just use, just email them info@milesfranklin.com or call them on 1-800-822-8080 and mention Mario or Monaco 64. So I'll stop here, Clive, and let you continue about
Well,
Yellen.
Just on your last bit on gold, it's about $100 off its all-time peak a few weeks ago, a few days ago, actually. So it's perhaps not a bad time to get in on the dip. But we have been talking over the last year or so about the gold miners, Maria, and you will have perhaps noticed that Newmont mining last night rose by 12%. They had extremely good results were reported. And we've got Barrick Gold, whose symbol on the stock exchange is gold, GOLD, get a report in 5 days' time. So we'll see how they do. But certainly Newmont's results were very, very good, and their share price took a big jump on that. And so those people who decided to go into gold mining shares or who decided to go into the GDX or the GDXJ will have seen a little bump in the share price of their ETFs. And Barrick, I don't know what it's going to do next week when they announce the results, but we'll certainly see what's going to happen. But the gold miners, as you know, have been underperforming the gold price significantly over the last 5 or 6 years. So it's really time for them to catch up. And I think last night was a sign that they might be starting to do that.
Yeah, and I remember, Clive, I've got a chart here of Newmont. Back in the end of February, they had some, I think they closed some mines or they had some really negative news. And at the time, I remember saying, oh, this could be a good time to buy Newmont. And some people on
I
Twitter,
remember that.
yeah, some people on Twitter said, "Oh no, they got really bad management. They're really horrible." But I thought, here's the biggest gold mining company in the world, and this is what people, fund managers, hedge fund managers, they turn to these kinds of companies when they want to have exposure. And we heard recently that Stan Druckenmiller, who was a famous hedge fund manager, he bought into Newmont. So I'm sure he's quite happy. I mean, you've gone from 30 to 43. So maybe Barrick could be a way to play another move. But I still think Newmont is a good place to be. Here's Barrick, and they both pay dividends, pretty good dividends as well. So yeah, let's see, Barrick. Yeah, it's at $17. But like you said, look at it. And since, gold, this was the last time gold was above 2000. Barrick was at 30. Now gold is at almost 2400 and Barrick is at 17. So this could be, a way of speculating on the gold price. I mean, I look at buying physical gold as more insurance, but if you like a flutter, that could be, and this is not advice, of course.
It's I have to say I didn't know that Barrick had changed their symbol. It used to be ABX. I see the symbol for Barrick Gold is now gold, GOLD,
Yeah,
and that obviously for the gold bugs is the best symbol in the world. So well done to Barrick for getting that symbol.
yeah, and they've beaten the GLD, gold GLD ETF. It's GLD, isn't it?
That's right.
Yeah.
What else did Janet Yellen say? One thing which struck me, she said that there's about $300 billion of frozen Russian assets, and she believes that outright seizure is justifiable.
Yeah, no, that's great. Crazy, isn't
Uh, but she did say that no decision to do that has been made,
it?
and going on from that, she kind of said that not much of these assets are in the United States. Most of them are in Europe, and Europe is not really. She didn't say it, but I can tell you, Europe is not really considering seizure, as far as I know. They're considering the possibility of using the interest payments in some way to help Ukraine. But of course, Janet Yellen also suggested another option for the Russian assets. She said that they might use them as collateral for borrowing to help Ukraine. Well, of course, if you use them as collateral, they're as good as gone, because if you lend money to Ukraine with Russian assets as security, Ukraine's not going to repay, won't be able to repay. So the Russians have lost them that way anyway. So the way I look at it is like this, and I don't want to get into too much of a political statement, but if my son is at school and if he illegally or is not allowed to take a telephone to school, and the teacher confiscates it, fair enough. But the teacher can't keep that telephone for herself forever because that would be theft.
Yeah, and
So not letting it
sell it on
not
eBay.
yeah. So not letting the student use the telephone is one thing. That's a sanction. But saying and now it's ours is another thing. That's outright theft. So I think that's where I would kind of draw the distinction. The other thing she talked about in terms of sanctions was she was talking about the Chinese, and there was a question asked: should the Chinese banks face sanctions? And she said the Treasury has the power to sanction Chinese banks, and they are prepared to use it if necessary. And she went on to say that Secretary Blinken, is in China at the moment, discussing this particular topic. And the reason that it might be something under consideration is whether some of the banks are some way assisting Russia in terms of financing transactions. And of course, there's this discussion as to whether China is exporting items which could be used for military purposes. And I don't know more about it. I mean, I think someone said, I don't know if they're being facetious, but they talk about washing machines which contain microchips or something. But I don't know if that was a joke or whether that was serious.
Yeah, I
Um,
saw that Blinken arrived in China and he was getting off the plane. They didn't even have a red carpet for him. I don't think the Chinese are very keen on doing what he tells them to do. And in relation to these Russian reserves, I saw this tweet yesterday by this Olivier Blanchard. He's a French economist, MIT senior fellow, Peterson Institute for International Economics, right? And he was also chief economist of the IMF. And this is what he said, Clive, and I thought it was quite outrageous. He said, I thought it was a bad idea to seize Russian reserves before the US Congress had voted on the Ukraine package. It gave too easy a way for Congress to vote no and pass the buck. Now that they have voted, it is hard to think of good reasons not to seize. Yes, it will create a precedent. Countries will know that if they go to war against a country or a friend of a country where they have reserves, they will likely lose them. So what? I mean, I thought that was so ridiculous because he doesn't look at the consequences of what that could do to the dollar or to the euro. And this lady here, Kathleen Tyson, who's a former central banker, actually, but she kind of has seen the light, in my opinion. She replies and says, "So what? I spent my earlier career globalizing US Treasuries as liquid central bank reserves, margin and collateral assets. I single-handedly got US Treasuries into Clearstream, Luxembourg. Chairman from Citi said it was impossible. Uh, and look at me and took me to lunch when it got let's see, when it got the fastest SEC approval of a CA1 in history. I co-invented tri-party repo, now 18 trillion daily average, and global optimized derivatives margin. I designed operations of CLS Bank, which now settles 7.5 trillion a day average in FX settlements. All that is devalued by US lawless thuggery. So here's a woman who's actually, we were speaking earlier how treasuries trade overnight everywhere, they're liquid. She was the one of the persons behind making it like that, and now she's saying that the US is destroying all of that.
I think it's very dangerous that Janet Yellen should even be discussing it. I would have said there is no plan to seize Russian assets and have done with that. Sanctions, one thing, seizing or taking for yourself is another.
Yeah, and I noticed yesterday when she made that comment that gold was actually ticked up.
It did, yep.
It ticked up. And so, um, Clive, maybe we could move talking about gold ticking up. Maybe you could talk a little bit about what's going on in China vis-a-vis gold.
Um, so the main thing which is going on, which is the main thing I think is pushing up gold, is buying by the general public in China. Of course, we have buying by the Chinese central bank, which last year was the highest ever. And I see the numbers, which aren't finalized yet, but for the first quarter of this year was a very high number for China. Globally, central bank purchases were the second highest ever last year. I think it was a year or two ago that they were highest. But much, much higher than many years ago. So central banks are increasing their gold purchases. But more importantly, the public at large in China are buying gold. And the reason, I'll first of all explain why, and then I'll explain the reason I have evidence of that. The reason why they're buying gold is they no longer have or no longer wish to buy apartments. So historically, the Chinese middle class would buy another apartment as part of their savings plan. They'd put their wealth into an apartment, rent it out, and so on. And it was a very traditional way of saving. Of course, the stock market was there, but it's not like America where everybody's got a stock market account and a 401k. In China, that's not the case. The vast majority of people have no exposure to the stock market at all. If they had a bit of surplus wealth, they'd go to the bank, borrow some money, and do an apartment. But what's now happening is it's well documented that the Chinese population is on the decline. It's going to decline. There's a huge oversupply of apartments, which means it's getting harder and harder to sell them. And many of the building companies have gone bankrupt, and there are thousands, maybe millions, well, certainly millions of people who are left with half-finished apartments from the building companies, which can't be finished. So the idea of buying an apartment as a form of saving is a no-no. Nobody in their right mind is going to consider it when even if you build it, your building company might go bust on the way. And if you do have it, you probably can't rent it out anymore. So that's gone. Stock market is not really a thing for most people in China. But even if it was, the Chinese stock market is the worst performing stock market in the world, along with Hong Kong. The reason for that is there's quite a number of, let's say, non-business friendly policies coming out of the central administration. So people really are not willing to put their money in the stock market at the moment. They see it as too risky. So the next thing they could save in, of course, would be the digital renminbi, the CBDC that they have, the central bank digital currency, which is on their telephone and heavily surveyed. So everything they know is known. So for the people who want some form of saving, which is not in the hands of the government and not in the control of the government, the obvious way to go is to buy some gold. And there's three ways you can buy gold in China. There's more than 10 million people who are registered at the Shanghai Gold Exchange, where you can buy gold bars. That's the most popular bar there is the 100-gram bar. It's 99.99% pure. It trades at a premium to the Western price. And the reason it's trading at a premium is because gold is being sucked out of the West into China. Traditionally, the premium was, if you go back to last year, it's $15 to $20 last year. This year, most of this year, it's been of the order of about $30. But most of recently, it was on Monday, the premium spiked up to $100 over the Western spot price on Monday. It's currently this morning at $49 over the spot price, bearing in mind the premium typically this year has been about $30 over spot price. So what that says is there's a lot of demand through the Shanghai Gold Exchange to buy these 100-gram bars. We talked about the futures exchange a minute ago. The second way that people in China can buy gold is through their WeChat app, which is a bit like the Glint app that you talk about, Mario. They can buy 1 gram of gold for $70 or $80 or more. But the way where I have concrete evidence that there's a lot of buying going on is from the statistics coming out of the jewelry chains. I've looked at a number of jewelry chains, big ones in China, and there are tens of thousands of shops up and down China selling gold jewelry. And in China, gold jewelry is very bullion-like. Every item you'll find in a jewelry shop has the exact gold weight marked next to it. It's not like in the West where they don't tell you the gold weight. You've got to take a guess at how much the gold is worth. In China, you look at the gold weight, you can see the gold price on the wall. You take the gold price multiplied by the weight, you have your starting point. Then next to the item, there's another bit of information called the labor charge. You add the labor charge, and that's what you're going to pay. So you know what the value of the gold you're getting is when you buy an item. So if you're really bullion-centric, you're probably going to buy an item which has got a lot of gold and very little labor charge, like a decorated bar. And if you a little bit more less caring about that, you care more about the aesthetic value to show your friends and things, you're probably going to buy some gold bangles or a gold ornament. But it is a very traditional way of saving in China to buy gold items, especially for gifts to other people as weddings and so forth. So how do I know that the people are buying more gold? Well, the statistics show me, based on the latest results, that gold sales through the jewelry shops are up a good 60% year on year. And that's across the board. So I think people are basically saying, where can I save money? I'm not going to put it in the digital yuan where they can survey me and see what I'm doing. I'm not going to put it in property because that's going down. I'm not going to put it in the stock market because that's dodgy. So they're going to the jewelry store and buying gold.
Yeah, and you should know as well, people might be asking, how come Clive knows all this? He's not in China, he's English. Well, your family is partly from China. Like your wife is Chinese and you've visited there many times, haven't you?
That's right. Yes, I had the good luck more than a decade ago to meet a young lady on an aeroplane who happened to be Chinese. And that worked out very well.
So when was yeah, sorry, go ahead.
You asked the question, Mario. What was the question?
No, when was the last you went to China recently, didn't you? In the last
Last time I went to China itself was just before the COVID pandemic. But we went to Hong Kong more recently. Of course, Hong Kong is turning very much China-like now. They have what's called the National Security Law, which has been imposed by China. And the situation, which basically means you've got to spy on your neighbors and report them to the central authorities if they're saying something anti-Chinese and things like that. So if you try to talk about the Chinese situation with anybody now in Hong Kong, they'll change the subject. They don't want to discuss it. Whereas when we were there before the COVID pandemic, we had the demonstrations in the streets and everybody was willing to come up and give me their point of view and say, how much they wanted to stop China to stop interfering in Hong Kong. But you won't get anyone to say that anymore. And even in the streets, they had school children handing out pro-China and pro-national security law, leaflets, flags, banners, badges, stickers, and that sort of thing. So an awful lot had changed when I went there last year compared with before COVID, when the last time I was there before COVID was when they had the demonstrations, the sit-ins at the airport, and some violence in the streets.
Yeah, I mean, I remember the demonstrations, but I also heard that one of the reasons the Chinese were trying to crack down uh, on the security in Hong Kong was because, for example, I think there was a case of a young Chinese guy who I think killed his girlfriend or something, or did something really bad, and he fled to Hong Kong. And from there, he went to like Taiwan or another country. So I don't know, but yes, Hong Kong, a lot of people think it's China. Like you said, it's becoming more and more closer to China. It's like called an autonomous region. But I also saw that in Hong Kong, people like their gold as well. There's no capital gains tax. Taxes are very low. Is that the same thing in mainland China?
I don't know what the sales tax is in the mainland. It might be 7%, but I'm not sure about that. But the fact is that there's a lot of Chinese people do go to Hong Kong, and there's two things that they will do when they're in Hong Kong. One, they will visit the luxury goods shops, the handbags, and the other one is they'll visit the gold shops. So the gold shops in Hong Kong are doing far more business. I won't say collectively, but individually than you get in China. There's a lot of interest in the gold shops in Hong Kong. So density of gold shops is you have a lot of them on almost on every street corner, far more than you get in in that typical town in the UK. You might have two or three jewelry shops. Well, in Hong Kong, you've got, I don't know how many you've got, but there's going to be, I get a guess, more than 100
Yeah.
in a small town.
Talking about taxes, Clive, I heard recently headlines about the fact that Joe Biden wants to increase the capital gains tax, and he also might want to introduce capital gains tax of 20%, 25% on unrealized profits, which to me seems crazy.
Well, that
If you want to kill, in the investment or the stock market, that's what you do.
yeah, I mean that would be completely iniquitous. Imagine that I think that some meme stock, let's call it Nvidia for the sake of the argument, is the greatest thing on the planet. So I buy Nvidia and it goes from 100 to 1,000, and now I have to pay capital gains on that 1,000, even though I haven't sold my stock. And then it goes all the way back to 100. Well, I've just paid a whole bunch of capital gains tax on something which is worth the same price as I paid for it. Nobody's going to buy a stock ever again if that happens.
Yeah, it sounds crazy. I don't know what he's playing at there. Clive, I just wanted to show the viewers because usually, as you probably know, I look at the markets towards the end of the my videos, and I'm sharing here with you guys. This is where I get my data from my IG account. So you can see that actually gold is continuing to trade back up. We made a in the beginning of the week, gold came off quite a bit, went below 2,300, but right now we're almost back. As you can see, we got up to 2,350, and it's 9:15 a.m. London, by the way. So it's picking back up. So is silver is doing quite well. I saw that Alphabet, the company that owns YouTube and Google, they did really well, and they've declared their first dividend. It would be nice if Alphabet decided to increase the share of the profits that I make from adverts on YouTube. That would be nice, but I don't think that's gonna happen. But as you can see, the Nasdaq yesterday was down like 300, 200 points. Today, well, during the day, and today it's up 194. The currencies, I think you can see here, the yen. The dollar got up to almost 157 yen, Clive.
Well, the yen is the lowest ever.
Yeah. Well, not ever, but in the last couple of decades, because actually I remember the yen above around 300 in the early 80s, but I see what you mean. I saw that their governor, Bank of Japan, he made some really convoluted, weird statements. I don't think it's going to help. Crude oil is up a little bit here, as you can see. And yeah, so how do you see the general stock market? It seems to kind of have topped right now. Of course, we've had a lot of these earnings. They've been kind of mixed.
We've been through a period when value didn't matter at all. I'm going to call it a meme stock environment, where if you believed in a stock and it had a lot of potential, people would buy it without really caring what those earnings were worth. I think we've got a touch of reality come back into the stock market. We've seen many of the top stocks what's known as the Mag 7 or the Magnificent Seven come off their peaks, and very sharply off their peaks. So I think the excitement has gone out of these stocks, and people have started to look at, what have I actually bought? Have I bought something which has got any real value? And at the same time, we're seeing the Dow Jones, which is a more traditional index of companies which actually make something, rising. So I think there's been a shift from growth, or even MEM, I'm going to say from MEM to value now. Obviously companies like Alphabet are doing very well because they actually do make they're not on a very high multiple. They are making good profits. But actually, talking about the stock market, Mario, we perhaps should talk about this bid which happened yesterday for one of the very large mining companies.
Yeah. Here we go.
So
Anglo American rejects highly attractive BHP offer.
So British, it's called BHP. It used to be called Broken Hill Propriety about 30 years ago. It was an Australian company back then. I don't know whether it's Australian or British these days. They've made a bid of 30 billion or something like that for 31 billion pounds for Anglo American. Meanwhile, Anglo American have announced that they're going to spin off two of their subsidiaries, which might interest some of your users. One of them is called Cumber Iron. I know none of your Cumber Iron ore, none of your users are interested in iron ore, but the other one is called Anglo American Platinum. So if you happen to be a shareholder in Anglo American PLC, you might get, or you will get, some shares in Anglo American Platinum pro rata according to your shareholding. And on the same day, BHP made their bid. Now, BHP, of course, is a larger company than Anglo American, but I don't think this is going to go down without a fight. Anglo American are going to say, and I see they've already said it, that the offer is highly unattractive. And I think BHP are being very adventurous because the Anglo American share price has fallen an awful lot over the last few years. And it's certainly a lot cheaper. So they're taking advantages. And if BHP get it, they will only keep the good bits of Anglo American. They'll get rid of all those troublesome mines in South Africa where the people are on strike and things like that. But they'll keep some good bits, and they'll become probably one of the largest copper players in the world. But of course, there will be other companies interested in Anglo American. So what Anglo American will be doing now is going out seeking, first of all, a higher bid from BHP, but secondly, they'll be talking to companies like Glencore, companies like Rio Tinto, which are much, much larger than Anglo American, and seeing if perhaps they can start extracting a better price. And of course, the directors probably don't want to merge with anyone in reality unless they get some sort of golden parachute, i.e., guaranteed payout and a jobs for life or something. That's kind of the way it often works. So all of that has to be discussed. There could be other players like Vale in Brazil come in, I don't know. But what I do love is a very large company getting into a big fight when everybody wants to own it. I think that's where we are now. We're going to see a lot of developments. And I think the hedge funds and the arbitrageurs are going to have a lot of fun calculating the probabilities of various outcomes and working out the value of the parts if it gets broken up and what could happen. But of course, the one thing which will happen with Anglo American is they're going to come out and say, we're making some changes to our company to improve the profits and to give everyone a bit better dividend, and maybe we'll spin off some more parts. I don't know how much is in gold. I don't have that figure, but obviously Anglo American will have a gold part to it.
Yeah. So before we wrap up for this Friday, Clive, just wanted to show the viewers this chart of silver. And it gives you the bigger picture, and it's a logarithmic chart, so it's not like it's like a percentage based chart, and it's quarterly. And you probably heard of this teacup that's been forming for over 40 years. Teacup formation is usually like very bullish, but you need to break out of the handle. And you can see here that we've clearly broken out of the handle. We almost went up to that 30 level recently. I think the high was, what was it, 29.68. And it looks like we're picking back up. It looks quite bullish for me and to me. And I think people just need to be patient. I think we've broken out. The next target is going to be 30. And once we break 30, it could all get very interesting. And I expect silver to catch up with gold. What do you think, Clive?
Well, I'm going to a gold dealer in Geneva today, either before or after my lunch, to see what they've got. I usually end up buying something, whether it be silver or gold. But last time I was there, which was only a week ago, I got these two lovely coins. This one is from Canada. It's got the Queen's head on it. It's a couple of years old. What date is it? 2016. But on the back, it's got a Superman symbol, and it's absolutely immaculate. You probably can't see the front of it, but it's got a very delicate pattern behind the Queen's, all around the Queen's head. It's an extremely delicate pattern. You couldn't fake it, and it's absolute mint condition. Never been. It's inside a case, plastic case.
That
Never been touched by a human hand.
Canadian mint?
It's it's produced by it's 1 ounce, and it's produced by the Canadian Mint. It's got a value of $5. So of course the silver in it is worth a lot more than $5. So I paid more like 30 something for it, and equivalent of $30. And this one is the British Britannia. That's a 2016, I think. I don't see the date on this at the moment, but 2020. But the English Britannia, I love these coins. This is also attractive because it's got you can't see it, but micro dots behind the Queen's head. It doesn't focus well enough here, but it's very, very beautiful when you look at it close up. And again, it's absolutely immaculate. Never been touched by a human hand in a plastic case. I'm underpinned by the silver price at roughly $30, and I paid a bit more than $30 for it, of course, because they have to make a profit and they have to charge VAT. But realistically speaking, I think that will be recovered in the next. I think they'll be recovered this year with the silver price rise.
Yeah, I remember I bought my first silver bar in 2003, and I still have the receipt. And the VAT at the time was 17%. It was less than 20. And at the time I was like, why do I have to pay this? But I look at the price and where it's now, it seems irrelevant. So that's why I say to people, don't worry about the VAT, because the way silver is going to eventually move, in my opinion, is going to make it irrelevant. So just before we end, I was telling Clive before we started that I have also like old silver coins that used to circulate. They're not bullion. And I was looking through some of them, and I found this one here, and it's Italian from 1967 or six. Well, I've got two here. And the date actually, Clive, is on the edge. So
that's interesting.
yeah. So one of them is 67, the other one's 1966. It's 500 lira, and it's got Christopher Columbus's ship there. And it's got this, it's got a woman, I don't know who she is on the obverse. But I looked at that website I told you about, silveragecoins.com. And I found that Italy had silver circulating coins until 1970. So there you go. And this is about, in pure silver, about a third of an ounce. And I don't really remember how much I paid for these coins. I think I got them like a long time ago when I was running the business, the pawn shop in Bromley, and people used to come and just sell coins. I probably paid scrap for this, so and I kept it. So, Clive, yeah, any final words for the viewers as it looks like we're entering not just well, we're already in an uncertain geopolitical world, but it looks like we're entering like the stagflationary age of the 2020s, which I think might be even worse than the ones in the 1970s, just because there's so much more debt.
Perhaps I'll just answer one of the questions I get a lot coming to me on LinkedIn from people who've watched your show. And the question basically says, should I take all my money out of my bank and buy gold? So I'm sorry, Barry, I'm going to say to people, don't take all your money out of the bank. You need to keep money behind
Yeah.
for your unforeseen expenses, for medical emergencies, for who knows what. But you don't need to, if you happen to, and you don't need to worry too much if your balances are small anyway, if you're the average guy in the street. But if you happen to be a multimillionaire and you've got millions or something close to that sitting inside a bank, then you need to be thinking about doing something other than cash, other than bonds. And obviously gold should be part of your strategy, as should silver. But again, it's not as a wealth manager or my life, I don't say to anyone, put all your eggs in one basket. And I would say keep the minimum in the bank that you need, but no more.
Yeah, I agree. When I talk about gold and silver, I don't mean people should go out there and even borrow to buy gold to make money. It's just if you have, a substantial savings, or if you want to start saving, it's a good way to do it, because you're not going to hear from any financial advisor, especially here in the UK, that you should be buying some silver, and a few sovereigns every month. They want you in the financial system. And it's interesting because gold and silver physical, they're not seen as financial assets in the UK. So yeah, I agree with you, Clive. And with that, I'm going to wish you a great weekend, and hopefully we'll talk again next Friday.
With pleasure. Bye bye, Mario, and thumbs up all your listeners. Don't forget to subscribe to Mario's channel.
Thank you, Clive. Take care.